So let's talk about Carvana. It was a pandemic darling. And fast forwarding to 2023, it's been, for the most part, a great year. The price bottomed back in November at, say, $4. Once price breached and closed above this weekly sellers level, became a flip zone. Hence, price penetrated the zone to the bottom, came back to fill any remaining unfilled orders, forming a double bottom. And then it was off to the races. It next had to deal with this support, now resistance level. No sweat, price closes above it. However, it got snagged and ran into sellers at the daily sellers level at 30, I should say $57. All right, and we'll see those zones a bit more on the daily chart. Before we continue with the analysis, let's look at this article. So shares in Carvana surged this past Monday after analysts at JPMorgan upgraded the ratings of the online used car dealer to neutral from underweight, citing improvements in productivity, cost, and culture. Stock has spiked by more than 770% so far this year as the Arizona-based company has moved to overhaul its operations to solidify its balance sheet and secure positive cash flows. The restructuring push has included an exchange of some of its outstanding bonds for new notes that would be backed by Carvana's assets. Carvana was previously a pandemic era darling, as I mentioned, offering customers the chance to buy used cars during a time when the supply of new vehicles was constrained by global chip crunch. But more recently, Carvana has seen demand falter as more consumers rein in spending in response to elevated inflation and broader economic uncertainty. But however, here's what JPMorgan says. We believe Carvana's approach to retailing used vehicles have given it a multi-year head start in the online-only space of a fragmented used vehicle industry, allowing it to expand at a rapid pace. However, they added that this came at a cost that has now come to hurt during a sharp pullback in industry volumes due to higher rates and higher prices. All right, so kind of going back to the charts, we looked at the weekly chart. Just want to show you those zones on the daily chart. So you had a drop in price, a couple of basic candles, and a drop. So this is a drop, base, drop, and then you had another one, drop, base, and then drop. When you have a level on top of a level, that is a huge confluence for price reversing. We've seen price hit that level not once. That was back in August of 2022. Not twice, but a third time. So the sellers are defending this level at $57. And even if the sellers lose the battle against the buyers, then it has to compete with the daily sellers level at $66. And typically what happens is that you'll see price penetrate the lower zone, but when it gets to the upper zone, there are less, in this case, buyers and more sellers, which will reverse price. Nevertheless, price has based this week. You have this gap higher to begin the week, and you also have the 200-day moving average trending up, so that's good for the bulls. However, all this is just a consolidation, and we really need to see a breakout at some point in the future if prices are going to go higher, above 70 or lower, say below 20. I do not anticipate Carvana going below 20. Again, this level, if we scroll up to the weekly chart, was support, resistance, should serve as support once again. So again, price will be range bound till we get a breakout. You can trade the range, sell at 50, say 60, buy at 20. Thanks for watching. Subscribe. Please like the video.